Good afternoon. And sorry, let me apologize first because I've lost my voice, so you bear with me. Hopefully you will understand and hear me. The discussion sorry, this afternoon, it's talk about large African companies, but I'd like to put it into context so you understand the angle. I think about a year ago or 2 years ago, there was a discussion on large African companies, and it was really in terms of their impact on the economies in the countries, where there are impacts on jobs, et cetera, et cetera. The idea today is still talk about large African companies, how they are being financed, but more importantly, when they say the next generation, how can we support today medium-sized companies to become the large African companies of tomorrow? So a big part of the discussion, the focus will be on that. I will put out some general ideas, and my various colleagues here will have some specific questions for them. If we were to look at some of the large African companies and window them today, we have many of them in South Africa investing in the rest of Africa, or also in Nigeria investing all over. A lot of them, you know them, they are either in the financial services sector, or now more and more they are on telecom and media, and some of the very few though are more on some manufacturing, if you take Dangote, Simar, or others. Now, what we have seen, we also have now Kenyan companies going actually a lot to the rest of East Africa, whether it's Uganda, Tanzania, Rwanda, expanding more on that side. So, which is good news, we see more on that. And obviously they have created jobs and help support the local SMEs. But part of the question is, why small and medium-sized companies, and let's say here particularly the medium, they face constraint in terms of funding. Banks don't fund them the same way they would fund large companies. I think we need to look at the context, the environment in which we're looking. You cannot just blame banks, but they don't put long-term funding to those companies. But look at the context, the kind of regulatory infrastructure that you need that are not around credit bureau, for example. Somebody was talking about, Simon earlier, that you don't need that because of the mobile phone, mobile payment, you have a lot of information. But in the formal system, you don't have, for example, the credit bureaus or proper collateral registries, or even more important, in certain countries where you have some of the regulatory framework in place, you don't have enforcement. I mean, leasing is something that we have tried to develop. I can talk from our own experience. You can put the best law, best regulation in place. But frankly, if I'm a leasing company and you don't pay me, and I cannot collect the equipment, let's say whatever in financial lease, I cannot go and reprocess it because of judiciary and stuff like that, even if the laws are there. Sorry, so we're not going anywhere. So we'll put all of this into the context. But we are talking about capital markets. I remember Colin Coleman was saying, taking example of the illiquidity of those markets and the way they are so tight, they are tiny, except maybe South Africa. So how can you issue papers in those markets? Very few. And it's a way, for example, to get long-term funding, often local currency when you need them, from contractual savings, whether bank or, whether pension or insurance, particularly life insurance company and so on. So this is the broad context. So the speakers will ask them to maybe introduce themselves as needed, but I will start with Eric on my left. Eric, tell us about your business and share your recommendations about how governments and development partners can assist in facilitating the creation of a new generation of large African companies.
Okay, hello? Okay, thank you very much, and I want to also thank the organizers for giving me the opportunity to be on the panel. My name is Eric Osiakwa, and I'm from Ghana, and I'm managing partner of Shanzu Capital. We're based out of Mauritius. So Shanzu Capital is a firm that I started recently, 2 years ago, out of my experience of being one of the pioneers of broadband on the continent, who became an angel investor. And now, hopefully, we're trying to build on that experience to create a firm that will be investing in SMEs and building them to liquidity events or for private equity firms. So essentially, the thesis for Shanzo Capital is that we're focused on the tech sector in Africa. We look at 5 key countries that we call the kings of Africa's innovation ecosystem, similar to the Asian tigers. So I came up with this concept, which is underpinned by the fact that the African rising narrative is actually an African tech rising narrative. In other words, tech is really what is propelling Africa to be the future of the world. Actually, TechCrunch headlined a story last week was very interesting that the future is African. And so there are 5 key countries. As you know, there are 54 countries, but we think that Kenya, Ivory Coast, Nigeria, Ghana, and South Africa are the key countries that are leading the tech revolution in Africa. And these countries are leading lights, and they represent West, East, and Central, as well as Southern Africa. And so we focus on these countries, and we essentially focus on tech-enabled businesses. So we look for the ways in which technology is disrupting existing markets. So for example, if you take financial services, we look at fintech companies, and we look at companies that are beyond just sort of mobile money, but how does mobile money create more disruption and generate inclusion as well as leverage in the financial ecosystem? So how are companies, one of our companies, for example, is looking at a wallet service, so a PayPal kind of service for Africa, but based on mobile money. And now they've extended it to bank account. So if I'm an individual in Ghana and have a bank account, and I have Empower payments, I can actually move money from my bank account into a wallet that enables me to do online transactions. Right. This is quite powerful because suddenly somebody in a rural part of Ghana who is not enabled, doesn't have a credit system, but has cash in a bank account or in a mobile money, can now be able to do online transactions globally. Right. So we look for this opinion. We think that tech is going to disrupt existing markets. So education, we're going to see this in health. We're going to see in how agriculture is delivered. So we primarily look for startups in this space, and we actively invest. What we do is venture building. In other words, we don't just write one check and walk off. We actually look for companies that we can, over 3 to 6 years, build them up to hopefully liquidity events, or to the point where a PE firm can invest in those companies. Because really what's happened is that if you take the tech ecosystem, there's angel investing accelerators who are able to start companies, and then there are the big VC firms and PE firms up here looking for deals. And there's nobody in the middle really building these companies to get to that point. So what you're seeing is that there's a certain level of saturation in the market. So if you look at the top VC market, there are very few deals that come up, and then there's so much money looking at it, so valuations go very high. And yet, when you go down, there's a lot of ideas failing because there's nobody really helping these SMEs. And as our moderator said, the banks can't finance these companies, right? Because they're not really at a point where a bank can really, they don't have collateral and all the other stuff. So a bank is really tough for a bank to look at them. So we really think that that's where the opportunity is, what we call the missing middle, and that's what we focus on. Thank you.
All right. Thank you very much. Thank you very much. Eric, that's one point of view. Let's hear right now from Sherwin Charles, with Director Nardo for Nandos. Sherwin, what is Nandos' recipe for success, and what are your recommendations to African governments looking to assist the creation of international business, such as yours?
Thank you very much. I speak here today as an ex-director of Nandos, but I'm still in the group. It's something I will touch on a little bit later, but I'm currently the CEO of a social company called Goodbye Malaria. And the idea was that we need innovative partnerships in Africa, and how does one achieve that? And I'll touch on it in a minute. But really, how did Nando's start, and what was its success? It started out with the vision that an entrepreneur had of changing how the world thought about chicken, one chicken at a time. At the time when Nando's in 1987 started, people just knew about fried chicken, which was KFC. And so his concept of grilled chicken was a very difficult one to bring to the market, and really he had to change how the world looked at chicken. His second philosophy that drove him as an entrepreneur was to have fun and make money. Now that's really a contradiction, because when you're having a lot of fun, you're not making much money, or vice versa, when you're making a lot of money, you don't have much fun. So his aim was to find a balance in building the company. And there were two things that were absolutely crucial in the success of Nando's. One was its people and its culture, that the business really invested in resource building. It really invested in the people that were involved in the business. And it was driven by 5 pillars, which is pride, passion, courage, integrity, and obviously family. It's an Afro-Portuguese brand, and it's really about family. This gave him the ability to face the challenges of the road ahead. And really the challenges was operating a business in then and apartheid South Africa, was really looking at all the financial challenges that they were faced with. And if you look at the business today, which is over about 1,100 stores in 26 countries, one doesn't quite envisage the road that this business has traveled. And I listened with a smile on my face when Don Gibbs was talking, because he kind of read the script of Nando's, which was, it is about people, it truly is about patience, and you got to have plan B or pay lots of school fees. And I think we did the latter in paying lots of school fees. If you think about the business, it took 25 years for us to go from 1 store to 1,000 stores, and the business will get to 2,000 stores within 7 years of that. So really, one had to be patient in building what is considered a large African company. The second thing that made the business work was, in the early days, I think it was store number 3 or store number 4, there was a private equity player who came in to play with the entrepreneur. So at that early stage, really it was about finding someone who believed in the vision and the business to support you financially. And I think from the discussions that I've heard today, and I haven't been here since this morning, I only got in this morning, you heard people talk about Africa needing private equity, and that's one of the things that I want to challenge our governments to look at, is saying, how do we enable private equity to become a stronger force in building medium-sized businesses. The other thing that we did in terms of capital challenges was we went the route of franchising. So one of the successes for Nando's when capital became a constraint was to look at how franchising could expand the business. That allowed it to be accelerated, but it meant that you had to have very, very good processes, you had to have very good operations, and you had to be very strict on governance, especially on the audit side. This was all facilitated by technology. So you had to have good business intelligence systems that sat above everything else, that allowed you to make very efficient and impactful decisions when you're looking at a system now that includes franchises as well. How do we get government to play? I think we all agree that government needs to be the enabler. It really is about infrastructure and energy. It's about the legal and regulatory environment. But the big thing for me is ensuring economic transformation in our countries. And that economic transformation will allow for sustainability. And that's what Africa needs right now. Is we all know that there's growing optimism. We know that we've got great growth rates on the continent. We know that we resolutely are on the rise. The one thing about Africa is when our mind is made up to achieve something, we do so quickly, much quicker than it's been done in the rest of the world. And we know that we are on the threshold of economic transformation. So we really got to hold our governments to account to ensure that they're the enablers for it. And it is about domestic finance, resource mobilization. It's about stopping illicit financial flows, and it really is up to some of us, the bigger corporates, to pay our taxes where the taxes are due. It's about private equity being an accelerator. It is about climate financing, as we heard the panel before us. And the last thing is it's about new forms of partnerships. And the big thing for us is, why am I at Goodbye Malaria, is we felt that as business we needed to have a massive social impact, a measurable social impact. And so we formed a partnership with the Mozambican government, which has now become regional. So it's together with South Africa and Swaziland, where we took the franchising private sector mindset to deal with a health problem being malaria. So we're the implementation partner to government's plan in eliminating malaria. Really an exciting time, because the biggest challenge is sustainable funding, and the solutions that we're coming up with are quite innovative. So it is exciting for us as business, and it is our way to show governments how we can partner together in new forms of partnerships. Thank you.
Right. Thank you very much, Sherwin. We just heard from Sherwin that clearly money is not the only thing needed. A lot of other aspects, but private equity play a key role in the growth of the business in developing Nando's. All right, now let's hear from Alex. Alex, share your vision and views about the untapped economic growth opportunities offered by the continent's media and entertainment industry, and the role it could play as a potential driver for job creation and economic development in Africa.
Thank you. Alex Okosi, I run our Viacom business in Africa, and it's interesting because I do believe that the future of the continent does rest in the small businesses that effectively employ and can create jobs for a large sector, not only of our population, but more importantly, the young population that right now oftentimes don't have access to great jobs, right? So this issue of what can government do and what can the banks do to be able to spur the growth of these companies and make them bigger is a critical one that we should really, really explore and brainstorm in terms of what's the best ways to be able to do it, at least to spur it, because infrastructure is obviously really key from a development bank perspective to make sure that we have it in place. But really, the mass amount of jobs to be created are going to come from these industries. So it's important that we look at how do we make sure that we put together with government frameworks for being able to, A, protect the banks that may be interested in lending to SMEs. For instance, I do believe that government should have initiatives that require banks to learn a certain percentage of their portfolio, at least their loans, to SMEs. Now that may sound a little controversial from a standpoint of banks who, of course, are oftentimes nervous about the collateral that the SMEs have to offer. But I do think that in that instance, you do force the banks to enable the SMEs by providing at least a framework to what they need to be able to meet, to be able to access those loans. Without doing that, you're going to have funding that never really gets to the SMEs, and again, this growth that we're talking about spurring will never happen. So I think it's a practical thing that government can do in that instance to be able to do this. From a development bank perspective, it's again being able to work with government and from a best practice perspective to help educate them on how we can create frameworks for protecting also the SME in terms of what they're able to create. In the space that I work in, for instance, in terms of media, IP is an issue, right? So if I'm a bank and I'm supposed to potentially lend to a small media company, how do I ensure that what they create will be protected at the end of the day? How do I ensure that they won't be pirated at the end of the day? How do I make sure that government, if they are being pirated, is going to have rules in place and enforceable laws in place to be able to curb it? Because if I'm a bank and I am looking at investing in an SME, it's going to be quite critical for me to know that the business model that they created is sustainable and that they can actually execute it. And they cannot do it if, again, there is no framework from a regulatory perspective and enforceable laws from a government perspective that effectively means that the return on that investment will happen because those companies become viable and bigger. So I think it's critical that government plays a role in being able to understand that it needs to put these regulatory frameworks in place. The development banks need to play a role in being able to also help, create funds that the SMEs can tap into. But in the process of tapping into these funds, they're able to actually put in place a way of being able to evaluate the viability of these SMEs. And those that do look good, the business plans that do look, the operations that look good, that can be scaled, are now supported in that process. But for us to, we can get into a theoretical conversation about what needs to be done. But I think that government needs to take practical steps. I think a lot of the banks probably not going to like the idea that they may be required to, commit a certain amount of their lending portfolio to SMEs. But I think there's no other way to really spur the sort of growth that we want Africa to have, recognizing that a large portion of African businesses, quote unquote, are in the informal sector. But effectively what that means is that they're SMEs.
All right, thank you, Alex. Fantastic, Alex likes controversy. But Alex, if you can go out the door after, that's your problem. I won't be. There are some bankers in the room, be careful. But joke aside, I won't get into, obviously, the debate, but I believe the market should be able to tell you. If you look at some banks, I mean, Equity Bank is there. They have had a model where they started going a lot to SMEs themselves, but it wasn't because the government imposed it on them. And frankly, if you can make money, you will do it. And but anyway, it's a rather long conversation. There are other things. You are talking about infrastructure. I mean, how can you be profitable? How can you industrialize a country if, the SME has to buy electricity at 30 cents a kilowatt, or 40 cents a kilowatt, or 25? But so number of issues to put together. Obviously, we're talking primarily about financing, but I think we should keep all of this in mind. I wanted to give people on the floor the opportunity to ask a few questions. Obviously, you can imagine that I'm not myself too directive.
Mr. Chairman, if I may, just to add to the controversy, I think we spoke about SMMEs. I don't think that the bankers should classify them as one group. You're talking about small companies and you're talking about medium companies in Africa. There's very different challenges that those companies are faced with. So I think it's become a term that we commonly use, but I think if one has to dig a little bit deeper, we actually should be dealing with them separately.
All right, thank you. Sir, the microphone, there's somebody who wants to ask a question, please. Mr. Jomande ate well at lunch, so Thank you.
Well, thank you. I guess just two questions. First, I asked myself, we're talking about financing new generation of large African companies. The first question that I have is, what are current large African companies doing that make us want to create more of them? And the second one is, haven't we learned anything from too big to fail? I don't know, I'm sure you all probably remember that, certainly here back in New York, on September 2008. I think the last gentleman, I believe it was Alex, he said something to me that is very, very important. First, we're talking about countries where illiteracy rate is so huge. People don't even know how to write their names. and yet we want to make them savvy of the new tool in the financial sector. Again, for me, we really have to look at things very differently. We will not solve any problem in Africa through the current lenses that we're wearing here on Wall Street. I don't see that happening. Second, you have now, it's incredible. People don't know how to read and write, but they know how to send money using mobile technology. I believe the challenge for us is to look into those small businesses because, as I say, necessity is the mother of all inventions. People have found ways to cope. So if we are not ahead of that curve, I don't think we're going to be able to solve anything. Oftentimes, government is more part of the problem than solutions. So I think there are some very creative minds in Africa, but one thing that I learned in New York is that the financial sector here is so creative that there is no problem that they can't solve. So that's the kind of thinking we really have to, I guess, engage on in Africa if we really want to make any change. So please, it's important, big companies, but again, small businesses are more the norm than actually the exception in Africa. Thank you.
Thank you. Can we take a second question if we have, and then maybe we'll answer both questions one by one? If there is a second question. Otherwise, I am going to do it like if you have an auction. Second question once. Good.
Hello, I'm Loladane Mustafa. I'm an attorney and consultant based in Washington, D.C. And I am amazed at this entire event because there haven't been many young people represented on any of the panels. You don't see anyone. Well, you're one person.
Are you saying that I'm an old man?
I'm not.
It's just my voice.
I'm not saying anything. But with
I have a voice problem today, but otherwise.
I know. But with the development in mobile technology, apps that are being created, there are a lot of young people. When I mean young, I'm talking less than 30, who are doing some amazing things and gaining a lot of traction, and we don't see any representation of that here. And this is the new trend. This is where we're going. And I'm wondering if we can speak about how to, from a culture that is very deferential to those who are more matured, how can we, that's how I'm gonna say it, how can we incorporate more young people who are creating different types of business models? How can we incorporate them to the dialogue? Thank you. All
right, so we'll go to the first question, and if I will do both. Let me start with the first one. I will ask my colleagues to answer, but one comment about the large African companies. You say, what do they do?
I mean, I think that...
you want to go ahead.
I think that the large African companies that are successful are able to create a case study for what is possible on the continent, right? So, for instance, convincing Viacom to invest in Africa needed us to be able to tell stories of companies that invested on the continent and started small and grew organically and became bigger, right? So Viacom's model is not to necessarily fund you with a slush fund for you to build a business. It's to enable you to start a business with the brand that it has, XYZ. But organically, we have to grow our Africa business and find creative ways to be able to make money and run it cost effectively in a way that meant that we can grow over time. What the bigger companies that have become successful are able to show, and the service that what they really do for us is that it gives investors confidence that if you can come to the continent and be able to find companies and grow companies that can return you a lot of value over time, whether it's the banks, there are a lot of banks that have been very successful, or whether they're telecom operators. I think from that standpoint, they are doing us that service of being great case studies for what is possible on the continent, that you can actually grow these companies that are, again, African companies.
Okay. The first question on sort of what the big companies are doing to help the next generation of entrepreneurs. I think that from our side as a fund, we've been open to, and we're having conversation with some of the big telcos to be LPs in our fund. Essentially, the way we sell the story to them is that, look, I mean, MTN was not existent 15 years ago, and somebody invested in that idea for it to become what it is. So MTN should be able to seed the next generation of entrepreneurs that you were talking about, the younger generation, which in my view are sort of what I call the creative. They're going to create, they're enabling the creative sector. So if you look at the first generation connected Africa to the rest of the world, which is the connectivity part, so mobile, broadband, submarine cables, I was involved in that. This next generation is going to build the next Google, and the next Alibaba is going to come from Africa. That is the company that we want to finance. So we are very clear in our vision that there is a strong, creative, entrepreneurial spirit that is being unleashed on the continent. And if we can bring smart capital to partner with experience, these companies will be phenomenal. And the next 10 to 20 years, there's going to be another renaissance of large African companies that will come out.
Go ahead.
Okay. I wanted sort of the last part about illiteracy is that I think that there's some level of technology that you can use to address illiteracy. So you give the example of a farmer who could not read and write, but now can store money on their phone so can do transactions. Right? And I think that we need to, and I agree with you that we need to look more into how we replicate that. So for example, one of my mentee companies is a company called Farmerline. So we're developing the next technology where a farmer can speak Twi, and then the technology can transcribe it into English and be able to send text on their behalf. Right. So we're trying to find a way of using technology to build illiteracy bridges. But the reality is that we need to expand our educational system. So again, how can you use technology to create virtual classrooms? And Kenya, my friend Eric Hesman's Break just launched a product in Kenya just 2 weeks ago, where now you can actually take a brick into a village, connect them to the internet, and create a virtual classroom. Now, what that means is that now the content is on this device that goes into the rural area. So suddenly you can enable people in our self-communities to get access to MIT curriculum, because MIT now puts it online, it's free. The only thing is that they get connected and they can get access. So I think that this is what the start I'm talking about, this technology that is going to be disrupting how education is delivered, right? And this is going to create a lot of inclusion. Anyway, I raise my hand.
No, thank you. Sharon, do you want to say something?
Yeah, quickly. I think from Nando's, it really is when you walk into our store in Washington or London, you're not buying an African product. You want great chicken. So the way we've made it relevant to create large companies back home is we've encouraged all our suppliers and all our countries that they will acquire the store layout, the furniture, the fittings, all the art on the wall is all African. So we inspiring African designers to achieve greatness. And it is about great design. We're not looking at mediocre. We build them up all the way to be great. On that basis, we can then offer them the offtake that they need to build their businesses and to make their businesses bankable when they have got a big company as their client. So if you come and visit our head office in South Africa, you will find that whatever you see around you in terms of furniture, fittings, whatever, it's all local African design, it's all local African architecture, and that's what's used in the stores around the world.
Thank you. But on the broader side, though, I would say, actually, we really underestimate the impact, because we don't look at it, deeply, of large African companies. Actually, it's huge often when you look at the value chain, because he mentioned Nando on what they've had, but if you look at some companies into distribution, I'll take one name. It just came to my mind. We have a company called Safal, and they do, roofing, but in kind of mixed zinc, aluminum, a number of stuff like that. Now, it's a large company, but the company employs directly 4,000 people. But do you know how many people? Because we did a study to see the impact of some of our clients. They have 24,000 jobs that have been created through local distribution companies, people that are selling their products. And we are doing the same thing about some large agribusiness companies that we work with them because of the impact on the value chain, where they buy from the farmers and so on and so forth. So if they're integrated within the rest of the economy, this is a huge, huge, huge impact. And actually, that's one of the reasons I believe we need more large African companies. And there is something else, somebody else said earlier, in terms of demonstration effect. You cannot quantify it, but it's huge when you're talking to other people who want to come to invest and look at and what they can emulate or what can be done. Anyway, let's move to the second question. Anybody wants to start, make a pick?
On your question of
He's
the
asking what was the second question. Can you
or the
paraphrase?
younger generation, how the culture. Yes, we all know that there's an unwritten cultural rule in Africa that the younger generation, you got to bid your time and your time will come. But I really think that when you, from what I do, so I'll give you a practical example. I was vetted in a company called SMSG 10 years ago. I met this, I called them my colleagues when they were in college. And they wanted to start this business. When they finished school, we started. And over 10 years, we built a business that was bootstrapped. We invested maybe, I think, $500 in total to a company that last year revenue was almost $5 million. We built our own office. We employ about 55 people. We're in 3 countries in Africa. We have had no investment. We had no debt. We bootstrapped the company. The company went cash flow positive in the first year and kept growing. Now, I give this example to just say, look, you don't have a choice, but you recognize us, even if we're younger, a bunch of young kids, because we built something from nothing. Right? So what I tell a lot of my colleagues is that it's really about building something. It's about outcomes. Right? So yes, you can advocate, but if you build a business, you employ 50 people, the president of Ghana will invite you to his breakfast or dinner, whether he likes it or not, whether you are young or not. Right. So I really think that that's what the youth should focus on, which we have an opportunity, and the barriers to building businesses have really come down. I mean, we started this company literally with no computers. We're smart guys. We figured out how to write a software, we figured out how to create value, and then we started going.
All right. Anybody else?
I mean, again, I think the African Investor team do a good job of being able to put this together. I think you ask a good question. It's an opportunity to figure out how that can happen as part of this, which is also to provide a platform for young people who are going to be the ones that create the next fast-growing companies on the continent, who are the ones that are creative and innovative and think about new ideas to apply to be able to get to where they want to get to. It does provide an opportunity to kind of figure out a way to incorporate them into these conversations. So I know Hubert and the team are going to think through that. So besides me being young, they can invite other people because that dialogue is obviously very critical. As a platform, we do it all the time, whether it's through our base meet sessions where we get young people speaking to business leaders, and we actually record it so that they can actually interact and understand how success is achieved, and also question some of the strategies. We do that as a platform, but I think it's more important to be able to do it in these sort of forums as well, beyond the web forums that do have young people participating in terms of how we solve the continent's challenge. So it's an opportunity, but I think this is a good start.
Thank you. Alex will ask you. Hubert, you need to link up with Alex. It will be a champion in making to reach out to that group because he's young like them. Any comment, Sharon?
I think it's a wonderful comment and question to the organizers of the event. I think you're absolutely right. We see it on the continent. There's a lot of shiny eyes in the youngsters that are making a massive difference. So certainly to the organizers, it's something to think about.
All right, thank you. Any burning question? Once, any burning question? Two? Anybody? Three? Done. Madam Barbara, you have the floor. Thank you very much, everybody.
Doing business in Africa. You can't afford to be without Africa Investor.